It's days like Monday that start to make you believe in crackpot conspiracy theories. Last Friday, gold closed at an all-time high, above $2,070 an ounce. Then Sunday evening gold rushes even higher, touching $21.50 in the futures market. But Monday comes when gold gets knocked down hard to 2026. All arrows were pointing to it to be gold's time to shine. We've been waiting for years for gold to break out of its top just shy of $2,100. We've talked before about the triple top in gold and that if it could just close above $2,100 and hold there for a few days, then nothing could stop it until $2,300 or $2,400 per ounce. Oh, but stop it did. For the fourth time, gold got knocked down. Today, I want to go over three things. Is gold's price suppressed? How is the physical investment market reacting? And where do we go from here? Let's get into it. Hey guys, welcome to the channel. I'm Sadie Stacker and I really appreciate your time and hope you'll find the information in this video useful. Whether gold's price is suppressed is a complex question with no definitive answer. Ultimately, the question of whether gold's price is suppressed is a matter of opinion. Arguments for gold price suppression? This is a big one. The conspiracy of all conspiracies. Central bank intervention. Some believe that central banks are manipulating interest rates and engaging in quantitative easing to artificially lower the price of gold and support fiat currencies. This is because rising gold prices can erode confidence in paper currencies and make it more difficult for governments to control inflation. There are variations such as the price being suppressed so that central banks can buy more gold. Short selling. Large financial institutions are often accused of naked short selling on gold futures contracts, which can put downward pressure on the price of gold. Market manipulation. Some believe that large gold dealers and bullion banks manipulate the gold market through various means, such as spoofing and wash trading. Lack of transparency. The gold market is notoriously opaque, making it difficult to track the true supply and demand of gold. This lack of transparency allows for potential manipulation and price suppression. So there are probably the main conspiracies going around. I think there's no question that all of the above are true to some degree. I say this because in reality, everything is manipulated. The Fed regulates inflation, which is manipulation. Oil producers cut output to raise crude oil prices is manipulation. Central banks sell U.S. dollars to stabilize their own currency. U.S. corporations buy back their own stock to increase its price. Car makers stuff the dealer channel with cars to create the illusion of high demand. Government price controls, subsidies, high-frequency trading, dark pools, insider trading, spoofing, hoarding, misinformation, bid rigging. It just goes on and on. So yes, definitely all of the above take place. But how much effect does it have on the price of gold? Contrary to popular belief, no single entity sets the price of gold. It's determined by a complex interplay of supply and demand, as well as market forces. Those include the spot market, gold futures market, central banks, investors, jewelry and industrial demand, geopolitical events, and production cost. Go to any online gold dealer website, Kitco or CNBC. They all show a different gold price. That's because different feeds are used. CNBC shows the COMEX price, which is a futures price. Kitco shows prices over various markets throughout the day. Bullion dealers are going to show different prices than those because bullion is priced in spot. Spot price refers to the price of gold for immediate delivery. It reflects the current supply and demand of physical gold in the market. And finally, different bullion dealers show different spot prices because there are multiple spot price feeds available, and they all calculate spot prices slightly differently. Make sense? Good. Can investors move the market? Was it the retail investor buying GLD, futures, or options that knocked the market down on Monday? One can make the argument that gold making its fourth run for the top brought in all those people who had bought gold at one of the three prior runs for the top and just wanted to get out now while the getting was good. True, But how much effect do retail investors have on the market? Very little would be my guess. And people who buy at the top are usually small retail investors, not the big market makers. My final thoughts are that gold's price is absolutely manipulated. How much of that had to do with Monday's knockdown isn't clear to me. And that's the problem. The gold market is so opaque, it's difficult to get a clear picture of what's going on. How is the physical investment market reacting? Our gold purchase index shows strong physical bullion demand. We produce this ourselves, and the methodology is not peer-reviewed, so take it for what it's worth. One could conclude that this is just Black Friday, Cyber Week shopping, except for that we see the opposite happening in silver. It has been steadily declining for about the same time. It looks to me like record high gold prices have brought in bullion buyers. Where do we go from here? Let's look at this article from CNBC. Gold price hits $2,100 for record high, and analysts don't expect it to stop there. It hits on all the arrows pointing to higher gold. Geopolitical uncertainty, weaker US dollar, interest rate cuts, Israel-Hamas conflict, and strong central bank purchases. Gold prices could reach up to $2,200 an ounce by the end of 2024. Central banks are the largest holders of gold in the world. From the World Gold Council, 24% of all central banks intend to increase their gold reserves in the next 12 months. And the reason is that they are pessimistic about the US dollar as a reserve asset. Articles like this go on and on. There is a lot of buzz going on around gold. Even though we got knocked down again, the investor sentiment strongly favors whatever powers that are suppressing gold are going to lose control sometime soon. That's why, here on this channel, our mantra is simple: keep on stacking. I've never advocated for quick trades or chasing fast money. The key to success lies in patiently accumulating gold and silver over the long haul. This slow and steady approach is what truly wins in the long run. And that wraps up today's video. If you found it informative, be sure to smash that like button to help others discover it as well. To stay updated with our latest content, don't forget to subscribe to the channel and enable notifications by tapping the bell icon. For those already safeguarding against uncertainties by investing in precious metals like silver and gold, ensure you're making your purchases at the best prices. Visit citystacker.com, where you'll find the best deals on precious metals bullion from top online dealers. The link can be found in the description for your convenience. As always, thanks for watching, and we'll see you next time.